So after Easter, I'm fully in the market now, and I'm going to stay in the market, and I anticipate good returns. And if they're not, you know what I'll do. I'll trade. I can't stop trading. I'm a long-term trader. I trade in and out of these 9 stocks, and that's what seems to suit me well. It's not going to suit everyone well, but it's what works for me. And the 4% trailing loss, that seems to be just about perfect for me, and it's working very well. Hello everyone, welcome to my channel. My name is Stephen Fox, and boy, do we got some wild goings on in the market. But I think we received such major good news on Friday that I'm going to predict what's going to happen next week at the end of this video. But first, let's talk about those 2 stocks you should avoid. Reddit immediately now, and Palantir also immediately now. I have personal experience with both of those. I think Reddit follows the Palantir model more than it follows the Facebook model, which is what I thought at first, and I think I was mistaken. I think Reddit is a meme stock. It's sort of where meme investing started. So we're going to take a careful look at that. My concern with both Reddit and with Palantir is the same, that basically the employees are going to reap the benefits. And also we're going to take a glance at my 9 artificial intelligence stocks, which I think are going to blast off next week. My concern with both Reddit and with Palantir is the same, that basically the employees are going to reap the benefits of this company, I fear, and not the stockholders. Alex Karp of Palantir, for example, has said that he doesn't care about the share price. Well, if the CEO doesn't care about the share price, that's not reassuring to a shareholder. And we have a similar situation with Reddit. Reddit pays their CEO over $193 million. Now, most of that is stock or stock options or stock options, but that is extreme. Their revenue was $800 million. So 1/4 of it is going to the CEO. And there's another official that's highly paid with stock too. The third highly paid person makes a couple million a year. And that's because he chose the cash option where he got cash instead of stock. But the trouble with the CEO getting that much stock is they have a lockout period when an IPO starts. And also with someone that has that much stock options, there's a lockout period. And once that lockout period ends, how much of it is he going to sell? So at some point, the short sellers get to chime in and they bring the stock down. And the stock ran up and has come down somewhat. But also when the CEO reaches the end of the lockout period, he can sell his stock. And it's awfully tempting, $193 million, I would think. And so I'm not really interested in enriching the CEO that much. That doesn't turn my crank. Palantir, I owned that when they first came out, okay? The stock is running about $23 or $24. I sold it at $24. They were a weird IPO to begin with. The employees put up their shares for the public to buy. In other words, the employees just got rich on the spot with that initial public offering. And they pay their employees with stock. And so your shares are constantly getting diluted. And the value is going down. And that's why, it kind of struggles up, but it's never going to be a wildly profitable stock for shareholders. The employees will do great, and they will thank you. And it's very patriotic because their main contractor is the United States government, especially the Defense Department. And you will see Palantir supporters bring up, oh, they got another government contract. They've been getting government contracts for over 10 years, okay? Them going to a stock was a way of employees enriching themselves. And so that's basically who you're enriching. They get defense contracts all the time. This is not unusual. They have a corporate part that I don't think does as well. But their main bread and butter is defense contracts and other agencies of the United States, like the CIA, the FBI. It's rumored they helped find Osama bin Laden. That has never been confirmed. They've never said yes or no on that. So I was enthusiastic about the stock when it first came out before I realized what the game was. And then I could see the stock was going nowhere. And I sold it at 24. And I hear people say, oh, this massive run up. It's just recovering what it lost. Reddit started trading last Thursday, and they had the little mascot in his costume ring the bell to open the New York Stock Exchange. So it was quite exciting. Bought it at 49, sold it at 53, it came back down again, and I ended up, I think, around 49.50, somewhere in there. And then the subsequent days, I bought and I sold. I'm an incessant trader. Long story short, when I finally got out of it at the end on Thursday, I basically had made about 20%. And the stock came down to $49, its original price, which just mirrors my experience with Palantir. But I was happy to take my 20% and go home. And of course, Reddit's statistics are awful, which makes it a meme stock. Its price to earnings is a negative 154%, and its earnings growth rate is a negative 7%. Now, they do have $800 million worth of revenue. Of course, it's going mostly to the CEO and other officers, but they're doing well, and they will do very well, probably. You know, Reddit is the 10th most visited website in the world. You would think there's opportunity here. They make their money on premium memberships. You get rid of the ads, and they also do advertising. So you would think they had some possibilities here, but I don't think they're thinking about the shareholders that much. But we will see if he offloads the shares that he's earned. So this is why I believe in being a trader so much. This is not a good situation, and I made money on it, and I'm happy with it. Palantir, I made money on it, and I'm happy with it, and good riddance, and I don't want to see them anymore. And let's look at Palantir, symbol PLTR, for giggles. They IPO'd around September of 2021, and they shot up to $35. And in 22, 23, they entered the valley of the shadow of death, and they were doing $7 or $8. So now it's gone up, since 22, and now it's at that $24 level that I sold it for when it was on its way down early on, because I finally got the joke and made a video about it, about how they were diluting your shares. And so they've lost about 30%, from $35 to $24. So I think other people are starting to realize, and there's recommendations now to sell it, and I think those are wise recommendations. This stock is not in your best interest. There's other stocks that actually care about their shareholders. On the screen now, you should be seeing the images of my 5 favorite stocks of the 9 that I hold. I sometimes hold them, I sometimes sell them. I'm holding all of them now, with the exception of AMD, which I will explain. My superstars are NVIDIA, symbol NVDA, and Super Microcomputer, SMCI. They are excellent stocks, but SMCI is a wild child, and it moves all over the map. But I think their servers will be needed for artificial intelligence. So as long as NVIDIA is doing well, they probably will be doing well also. My next favorite stocks are Broadcom, which is AVGO, and ASML, which is a Dutch company which does lithography to transfer the electronics onto the extremely small and dense artificial intelligence semiconductors. And also Vertiv Holdings is VRT. They supply all the electrical equipment for data centers, and cooling equipment is especially critical. They're sort of the picks and shovels version of a stock. The old days when the gold miners were mining, you could make money by investing in gold and trying to find gold, or you could buy picks and shovels and sell the picks and shovels to the gold miners. So that's where that saying comes from. And looking at the chart, you can see what happened with my 5 best stocks. I'm a long-term trader. I trade in and out of these, and I did this week with these especially. But at the end of the week, I decided to get back in, which I'm going to tell you why. As you can see, they mostly held level with a drop on Wednesday. Okay, and that drop is because they were expecting a really bad inflation report, which was going to come out on Friday when the market isn't open because it's Good Friday. But this anticipation, I know enough about trading that frequently, if it doesn't meet expectations, if the inflation report is better, stocks will shoot up. And was my feeling that is what would happen. And we got all sorts of massive data that was very positive, which I will go into at the end of this video, which signals that next week is going to be a star week, I think, if the stock market is rational to any point. And that's a big assumption with the stock market because it can be illogical for a long time. But I think we're getting good information that inflation wasn't as bad as they thought. And then there were other things that the consumer is buying more. So lower inflation, but the consumer's buying more. What a country. The 3 stocks that I like to a lesser degree are Cadence Design Systems, symbol CDNS. They provide software for NVIDIA to create its GPUs and CPUs, and also Applied Materials, which has geared their equipment to more towards artificial intelligence so that their equipment can handle artificial intelligence. So I have less issues with those stocks. The stock that seems to be suffering right now, although it looks wonderful on a longer-term basis, is Advanced Micro Devices. And the reason I'm having trouble with it is it shot up before NVIDIA held its GTC conference, which I think really made AMD suffer. Advanced Micro Devices really suffers in the comparisons. It's second only to NVIDIA, and it suffers in the comparison. Looking at the 3-month view, and I wanted to do the 3-month view, you can see that they've all done well on a 3-month basis, but Advanced Micro Devices, AMD, it shot up before that GTC conference and has been coming down ever since. So I don't believe in investing in stocks that are coming down, and I'm out of it for now. And strange as it might sound, they've just been diddling in the 170s and 180s. And if they would actually go to 190 on some kind of fundamental news, I'd be more prone to buy it. I've made way more money buying stocks at the top of their price range than buying them at the bottom. And the good news that should rocket the market higher on Monday is that the headline inflation number came in at 2.8% on a year-to-year basis and was up 0.3% on a month-to-month basis, which was expected. But the big good news was that the core PCE was up 0.3% on a monthly basis, and they thought that would be 0.4%. And it came in at 2.5 for the 12-month rate, which was expected. So the core inflation got a little bit better, and we were expecting worse numbers. So this is expectations of worse numbers that I think the market already priced in on Wednesday and Thursday. And you got lower core inflation on a monthly basis, and the consumer is still spending. There's no recession in sight. Consumer spending shot up 0.8% on the month, and it was only estimated to be 0.5%. So people are spending money. Personal income increased 0.3%, which is slightly softer than the 0.4% estimate, which is good for inflation. So there was no bad news and a little bit of good news. So I think the stock market is going to ignore this because there's a statistics that's more important than these numbers. I think inflation is becoming less important, and the real important number is how hot the economy is. Can it overcome the higher interest rates? And actually, I like the higher interest rates because I'm making good money on my interest checks coming in monthly. Since the beginning of the year with stocks and interest on my money, I've made $578,000. Not bad for working spare time at home. Actually, I make it sound easy. I'm on stocks all the time. Although doing a stop loss of 4% has helped hugely and has freed me considerably. So I'm a freed man, and I like the 4% stop loss. That seems about right. That seems to indicate there's something going on that I need to pay attention to and look at and decide whether I'm going back in. But the GDP, which is the critical number, gross domestic product, came in at 3.4%. Only 3.2% was expected. So we have a hot economy. We're nowhere near recession. We need the hot economy to overcome these high interest rates.